Why does it feel like every time you check your pay stub, the government has already taken a bite bigger than your rent check? You are working overtime just to keep the lights on, terrified that one mistake on your tax return will bring the IRS to your door. Meanwhile, the ultra-wealthy aren't just paying less. They have effectively opted out of the system entirely. They aren't using shady guys with briefcases anymore. In 2025, they are using a new, sophisticated holy trinity of legal loopholes to hide trillions in plain sight. But taxes weren't always a weapon used to crush the middle class. To understand how the system was rigged against you, we have to go back to a time when the rich actually paid their fair share. To really feel the weight of what has been stolen from you, we have to look back at the economic golden age of the 1950s and 60s. In 1952, under President Dwight D. Eisenhower, a Republican, the top marginal tax rate in the United States wasn't 37%, it was 91%. Now, modern economists might scream that this destroys innovation, yet that era saw the greatest expansion of the middle class in human history. It was a time when a single factory income could buy a 3-bedroom house, a car, and support a family of 4. The social contract was simple. If you benefited the most from the American infrastructure, market, and security, you contributed the most to maintaining it. The tax burden was heavy at the top, so it could be light at the bottom. Back then, tax evasion looked like a scene from a spy movie. It was shady, dangerous, and physically difficult. If a tycoon wanted to hide money, they had to physically move cash to Switzerland or the Cayman Islands. It involved literal suitcases, secret meetings in Geneva, and the constant fear of the FBI kicking down the door. It was a crime, and everyone knew it. The tax haven was a dark corner for drug lords, dictators, and the blatantly corrupt. It was not a standard business strategy for Fortune 500 companies. The system wasn't perfect, but the flow of money was circular. Wages were paid, taxes were collected, and that money was reinvested into the highways, schools, and research labs that built the modern world. The rich were still incredibly rich, but they were citizens first and oligarchs second. But this balance didn't collapse by accident. It wasn't market forces or natural inflation that killed the American dream. The shift from tax evasion, which is illegal, to tax avoidance, which is celebrated, required a deliberate rewriting of the global rulebook. The wealthy realized they didn't need to hide from the law if they could simply purchase the politicians who write it. They stopped using guys in trench coats to smuggle cash across borders. Instead, they started using lobbyists to erase the borders entirely. The destruction of the middle class began with a handshake and a signature, transforming the tax code from a tool of public good into a weapon of mass extraction. And the trigger was pulled right where you least expect it, not in a Swiss bank, but in a small courtroom in America. The turning point didn't happen in a smoky backroom. It happened when the definition of a tax haven was quietly rewritten. After the Panama Papers leaked in 2016, exposing the crude machinery of offshore accounts, the global elite didn't stop hiding their money. They simply gentrified the process. They moved their assets from dusty island post office boxes to the world's most glittering skylines. The glitch in the matrix is this: the United States, the very country pursuing you for taxes, became the world's largest tax haven. It starts in Delaware. You might think of it as a quiet state, but strictly by the numbers, it is the corporate capital of the galaxy. There is a single-story brick building at 1209 North Orange Street in Wilmington, Delaware, that is the legal address for over 300,000 companies. That includes Apple, American Airlines, and Walmart. How? Because Delaware law allows for anonymous LLCs. In many cases, you need more identification to get a library card in Ohio than you do to register a shell company in Delaware that moves billions of dollars. While the IRS announced plans to monitor your Venmo transactions of over $600, the Delaware Loophole allows corporations to shift royalties and revenues between states to effectively pay zero state income tax. This isn't a mistake. It is a feature designed to attract capital at the expense of public infrastructure. But for the global elite in 2025, the strategy has gone international again, shifting to the new sanctuaries, Dubai and Singapore. Dubai has marketed itself as the anti-woke capital of capital. With 0% personal income tax, it isn't just a place to hide money. It's a place to wash it in luxury real estate. The glitch here is the golden visa. By purchasing a property, you aren't just buying a condo, you are buying tax residency. You can live in London or New York, but on paper, your center of life is a penthouse in the UAE. Then there is Singapore, the fortress of the East. As Switzerland crumbled under U.S. pressure to reveal bank secrets, Singapore quietly stepped in. The mechanism here is the family office. In the last few years, the number of family offices in Singapore has exploded. These entities allow the ultra-wealthy to manage their money as a private corporation, accessing tax exemptions that a regular citizen could only dream of. This creates a two-tiered reality. For you, the tax code is a cage. It is rigid, automated, and enforced with the threat of prison. Your employer reports your income directly to the IRS, W-2. You have nowhere to hide. For them, the tax code is a menu. They choose where to be taxed, what to declare, and when to pay. In 2021, a ProPublica leak revealed that Jeff Bezos, Elon Musk, and Michael Bloomberg paid a true tax rate of less than 3.4%. Compare that to the 22% or 24% deducted from your paycheck before it even hits your bank account. The system hasn't failed. It has been engineered to siphon wealth upward. The laws are written in a language you don't speak, passed by politicians funded by the people benefiting from the loop. But understanding the legal mechanism is only half the battle. The laws are just the hardware. To keep a population of millions working hard, paying taxes, and accepting this theft without rioting, you need more than just obscure laws. You need a psychological software update, a way to make the victims defend the very system that is bleeding them dry. And that trap is set right inside your own ambition. The real genius of this system isn't the complex accounting, it's the psychology. It relies on a uniquely American delusion. The belief that you are not a poor person, but a temporarily embarrassed millionaire. Think of the global economy like a massive casino. You, the average worker, are on the main floor playing the slot machines. You pull the lever, go to work. You get paid, win a few credits, and immediately the house takes a cut. You can't leave the floor because you need those credits to eat. You are playing a game of pure probability where the odds, inflation, rent, income tax are mathematically stacked against you. Meanwhile, the people using the Dubai, Singapore, Delaware triad aren't on the casino floor. They own the building. They don't work for money. They make money work for them. This is the fundamental divide. Labor versus capital. The tax code penalizes labor. If you work an extra shift, you get taxed at the highest possible rate. You are punished for productivity. The tax code rewards capital. If you sell a stock or a piece of art, you pay capital gains tax, which is significantly lower. Or if you are smart, you don't sell at all. You use the buy, borrow, die strategy. You borrow money against your assets tax-free, live like a king, and when you die, the tax basis resets. It is a cheat code that requires a net worth of $10 million just to unlock. But here is where the trap snaps shut on your wallet. You might ask, if they don't pay taxes, who fills the budget hole? You do, but not always on your pay stub. When the ultra-wealthy hide $7 trillion in tax havens, governments run deficits. To fill those deficits, they don't cut spending, they print money. This dilutes the value of every dollar in your pocket. So when you see gas prices rise, or when a dozen eggs cost $8, that isn't just supply chain issues, and that is the hidden tax. You are paying the billionaires' unpaid tax bill through the devaluation of your own labor. They hold assets, gold, real estate, stocks that go up with inflation. You hold cash and wages that go down with inflation. It is a wealth transfer mechanism so perfect that the victims don't even know who to blame. They blame the store clerk, the president, or the immigrants, but they never look at the empty ledger where the tax revenue was supposed to be. The system relies on you believing that if you just hustle hard enough, you can join them in the VIP room. But the door to that room costs more than your lifetime earnings just to open. So we are left with a terrifying reality. The social contract is broken. The rich have seceded from the economy while leaving you to pay the bill. Is this the end of the road? Is this simply how the world works now? Or are we standing on the edge of a cliff that history has seen before? The history of empires, from Rome to the French Revolution, teaches us one brutal lesson. When the gap between the rulers and the workers becomes unbridgeable, the system snaps. We are currently living through the secession of the wealthy. The new tax havens of 2025 aren't just hiding money. They are hiding the future. The elite have realized that national borders, civic duty, and tax codes are concepts for the poor. They have become sovereign individuals, nations of one, floating above the laws that keep you awake at night. The bitter truth is that you cannot outwork a system designed to extract your value. You cannot hustle your way out of a mathematical impossibility. While you are fighting over a 3% raise that doesn't even match inflation, the real money is moving silently through fiber optic cables in Delaware or sitting in a gold-backed vault in Singapore. The game isn't just rigged. The board has been stolen. You are playing Monopoly, trying to pass go while they're playing Risk, conquering the board before you even roll the dice. So, what do? The first step is to stop defending the very people who are betting against you. Stop believing that a tax cut for a billionaire will somehow trickle down to your bank account. It won't. It will just trickle offshore. If you want to survive this economic shift, you need to understand the rules of the game, not just the pieces on the board. We will keep exposing these mechanisms so you can protect what's yours. If you want to see through the illusion and understand the logic behind the chaos, hit that subscribe button and turn on notifications. We don't sell dreams here, we investigate nightmares. And here's the question of the day, be honest. If you had $10 million and could legally move to Dubai to pay 0% tax, would you do it? Or is your loyalty to your country worth more than your paycheck? Let me know in the comments below.